If you're looking to invest in crypto for the first time or have an amount to invest but don't know how you should set up a portfolio, then I'm going to take you through what I think is a good split for a first time $1,000 investment in cryptocurrency. Hey guys, James here, and in this video, I'll go through a simple first time $1,000 investment in crypto. I'll look at specific cryptos to invest in, then go through the breakdowns and why each crypto takes up a certain percentage of the overall investment. I can't give you financial advice, so this is just what I would look to do, and hopefully this can help you as a reference. Make sure to subscribe to the channel right now if you want to get daily helpful cryptocurrency content and the latest crypto news. Smash the like if you get value in this video, and let's start with some assumptions about your $1,000. So before we get started, I want to outline some assumptions for this video. I'm assuming you want to invest the $1,000 for the long term and not trade it too much or try to earn daily income with day trading. Day trading really is a completely different scenario, and this video is focusing on setting up a crypto investment portfolio for your first $1,000. I don't know your personal circumstances and I can't give you financial advice, but with $1,000, you're not going to become rich overnight. And I think your first $1,000 should be nothing too fancy. I don't think a bunch of microcap altcoins is going to be the way to go with this. If you're new, then I'd say just having a few bigger cryptos is still going to give you a nice upside. The crypto market is still new, relatively quite small, and still very volatile, that you don't need to be searching for 100x altcoins, because the plain truth is that 99% of those will fail, and it's not a good way to start in my opinion. But let's get started on how I would set up my first $1,000 portfolio in crypto. Here's my spreadsheet of cryptos to invest in. This is just my opinion on how a sample $1,000 portfolio might look, but we can go through each crypto and the percentage of the portfolio they have. And this is how you should think of your portfolio in terms of how many percent of the overall does each crypto make up and why. If you're new to crypto, I'd recommend Binance or Coinbase for trading. Coinbase is the best for beginners, but it's quite expensive. If you sign up for Coinbase, you can also use Coinbase Pro, where the trading fee is 0.5%, which means you'll be giving away about $5 in fees, which isn't the end of the world, but Binance has way lower fees. Binance is more complex to use. The fees on Binance though are 0.075%, so you'll be paying about 75 cents for your crypto. Then when you want to trade in and out of your positions, you'll be saving as well. If you want to know how to use either of these platforms, just go to their respective playlists on my channel. Everything is there for you. And if you don't have accounts yet, I'll link both below in the description so you can go and sign up. But let's come to the first crypto, which is no surprise. Bitcoin will be the first crypto most people invest in, and no, I don't think you've missed the boat on Bitcoin. Now, there's obviously no way you're going to get those 1,000% returns that early investors got, but BTC is a different investment now with a different risk profile. Institutions, investment funds, and large wealth funds are buying Bitcoin right now as a store of value and an inflation hedge. Bitcoin will continue to rise, in my opinion. It's also the safest bet in crypto for me, and so it should make up a nice proportion of your portfolio. The way you should think of your $1,000 is like a pie chart with 100%, and then you can choose how much you want to allocate to each crypto. And this isn't financial advice, but you can easily change things around to suit your risk profile. But Bitcoin, for me, will offer a good risk-adjusted return. With Bitcoin, I won't want to just buy some and forget about it. I actually hold some of my Bitcoin in Celsius wallet. It's a crypto wallet that pays you for holding crypto on account. Celsius is a big blockchain project, and there are other brands that do this that you can have a look at, like BlockFi and Voyager. With this kind of service though, you can hold your Bitcoin on account, and Celsius will pool it with other people to lend it out to various traders that may need to borrow their asset to settle trades. This is a very common occurrence in finance, but with crypto, we actually can participate and get rewards for doing it. Because I hold some Bitcoin in my account with Celsius, I can get around a 5% return on my Bitcoin. Because Bitcoin is a proof of work cryptocurrency, it doesn't pay out any interest or yield like other blockchains do. So this is really the best way to actually earn 5% on my Bitcoin and increase my investment returns overall. I do have an account, so I'll leave my referral link below in the description. If you want to download the app, you can use that code to get $30 of free Bitcoin when you sign up, which is basically free money for signing up with an account. Moving on though, next we have Ethereum. Ethereum has a very high correlation with Bitcoin, meaning if Bitcoin moves one way, then so does Ethereum. This could mean you are really overexposed to Bitcoin price movements. However, evidence does show that Ethereum over time is uncoupling from Bitcoin and becoming less correlated. Over time, it should become ever more detached because Ethereum and Bitcoin really are not the same. Bitcoin is now a store of value and a hedge for inflation. Ethereum is a blockchain that allows for smart contracts and in the future will allow for staking, which means you can earn coins and earn an income from your holdings. Ethereum actually has a lot of issues as of making this video with high transaction prices, known as gas fees, that have made using the network prohibitively expensive, but it is the largest and most used smart contracts blockchain up to now. Ethereum is a first generation project and as such has many problems that second or third generation blockchains simply don't. But there's a lot of money and time invested in the blockchain already, and new layer 2 protocols are coming on stream to try and fix some of the current issues. As an investor, I understand that I need to be diversified and also have exposure to projects like this, but I will often come back to my investments and make decisions about selling or buying more. At number 3 though, we have ADA, the cryptocurrency of the Cardano blockchain. ADA is a project that I personally like a lot, and I did want to give it a higher percentage in this portfolio, but I think for your first $1,000, going overweight in Bitcoin and Ethereum is probably a safer bet overall because those two will get the most institutional investment over the next 12 to 18 months. I believe ADA has potential to perform very well over time because of the way it solves most of the problems that Ethereum currently has. Cardano is in a much earlier stage of development than Ethereum though, and therefore we must place a higher level of risk on the investment. Cardano will have lower network fees and more decentralization than Ethereum, while allowing for interoperability between blockchains. Cardano is often referred to as the internet of blockchains, or at least that's the hope. Moving on from that project though, now comes a choice of some different altcoins. There are so many projects that I like and think provide genuine utility and usefulness that could grow into big ecosystems. But with $1,000, you simply can't invest in all of them. For number 4 and 5 then, I want to allocate 15% for each investment. But what altcoins should you actually choose here? Well, Polkadot is another project founded by an Ethereum co-founder. Unlike Cardano, which wants to be almost the internet of blockchains, enabling cryptocurrencies and value transfers seamlessly across the network, Polkadot wants to be the blockchain of blockchains, actually being the basis for a modern internet. Polkadot wants to enable anyone to simply create their own blockchain with their own set of rules that uses the Polkadot relay chain as the basis for settling the transactions. It's another project that I think has huge potential and something that I personally do have in my portfolio. Solana is built for one thing, and that's speed of transactions. Whereas Bitcoin and Ethereum actually process transactions quite slowly, Solana can process multitudes of both of those blockchains put together. Solana would be a good platform for payments as it can handle more than 50,000 payments per second at a tiny transaction cost. And to put that into context, the entire Visa payment system handles around 3,000 per second. Solana already hosts stablecoins like USDC and USDT, and it could be the basis of blockchain payments in the future. There will be competition though in the future from other players like Visa. VeChain is a blockchain platform that is designed to enhance physical supply chains in the real world. Retailers and consumers could determine the quality and authenticity of a product. Using VeChain, you could see when and where a project was manufactured and how it got to your door. This can have a wide range and impact on quality and security of food and household items. Then we have a project like ThorChain. ThorChain is a protocol that will allow for seamless, secure value transfer across blockchains. So users can swap Bitcoin for Ethereum and then into Litecoin and then into something else seamlessly. Blockchains have a huge interoperability issue, so this could be an important bit of code that has value in the future. Without making this a crypto picks video though, I think the important thing is, in general, to invest around 15% of the portfolio in 2 smaller cryptos that you might like the look of. This is going to be down to personal preference and what type of project that you like, and this will be different for everyone. The crypto space is so large with so many good projects. The main takeaway for me, however, is that you'll put around 50% of your holdings in your top 2 picks. They may not be the same as mine. You may like Polkadot more than Ethereum. You may think that Ethereum has had a good run and Polkadot may have a better chance of providing returns. 20% though could be a good amount for a third pick, and then 15% each in a couple of smaller, riskier cryptos that you like the look of. That makes a nice balance for your first $1,000, but this can't be financial advice, and I know there will be many of you that would like to take more risk and choose 5 low cap altcoins and hope that one goes 20x. Or some of you would just put $1,000 into Bitcoin and 5% in Celsius and come back in 25 years' time. All of these scenarios could work depending on who you are as an investor and the amount of risk that you want to take, and also the projects that you like the look of. But if you want to sign up for Celsius and go ahead and buy some Bitcoin, you can get $30 of free BTC with my code linked in the description. Make sure to help this video by smashing the like button, and please subscribe to the channel as I'll be posting much more helpful cryptocurrency content as soon as possible. Cheers for watching, and I'll see you in the next one.